As of November 17, 2024, global stock markets showed mixed performance amid cautious economic sentiment. The German DAX remains steady, supported by industrial strength, but faces headwinds from softening consumer demand. In the US, the S&P 500 and the NASDAQ reflect resilience in tech and energy sectors, but are subdued by rising bond yields and inflationary concerns. Japan's Nikkei 225 is buoyed by robust corporate earnings, yet grapples with global economic uncertainty. Tesla's stocks sees a hold consensus from analysts, with projected revenue growth offset by margin pressures. Its future outlook hinges on EV market competition and production scaling. G'day folks, welcome back to another update. This time we're looking at the world markets. So before we go any further, make sure you hit that like and subscribe button to support the channel. It'd be greatly appreciated. First, we'll look at the trends on the monthly, weekly and daily. And here we've got the S&P 500. On the monthly, first off, it's actually making new highs. But notice the CCI, which is our main indicator of trend, is still above its moving averages, but it's got a bearish divergence, lower highs versus higher highs on the price. Now what I've done here, I've drawn a Fibonacci extension in that range, and that has actually hit near the 100% level. Now, so we might have a bit more to go, but that's close to the 100% Fibonacci extension. So also we've got a Fibonacci retracement, and if it does pull back, it'll probably pull back to the minimum, assuming it starts pulling back from where we are at the moment. It'll start pulling back to the minimum of the 23.38% level, which is that area there. That's assuming it starts pulling back from where it is at the moment. Of course, it could go higher, so long as the CCI keeps in a bit of a lower high there compared to that high. We're going to consider it a bearish divergence. On the weekly, it's also hit this moving average range of the CCI, giving us a neutral signal. But notice as well, we've got a higher high on the price versus lower highs on the CCI, and that's also another bearish divergence. We had a bearish divergence back here between those peaks on the CCI versus those highs on the price. Pull back, hit our target, then bounce from there. So that is a minimum. Again, the target we show is a minimum level it gets to, and more than 90% of the time it hits this minimum range. As in this example, on the weekly, it did bounce out of that, but sometimes it actually falls below it. On the daily, we had a few bearish divergences here. You can see there was one hit there, touched it, bounced. There's some of these smaller divergences in those little areas there. They were hit. There's a bigger one here. I won't draw the Fibonacci's, but you can see I've kept the target ranges. And the latest Fibonacci retracement, we've got this area here. Now, the reason I've got, that was from our previous analysis. You can see there, that's a double top on the CCI. And that double top, I still consider a bearish divergence versus higher highs in the price. And I've drawn a target area from that key resistance up there at 60.26, and that'll be the minimum retrace level if it pulls back from where it is at the moment. Now if we go to the intraday charts, looking at the hourly, we only take trades in the direction of the larger time frame. So if you're trading the hourly, we go long based on the positions of the daily in this case, and you would not be trading at the moment because the CCI on the daily is in that neutral positioning, so you'd avoid going long or short. But notice as well, if that breaks below that moving average range on the CCI, then you'd start taking short positions. Notice as well on the hourly, we did have this bearish divergence, lower highs on the CCI versus higher highs on the price. It's actually pulled back, and it's actually broken through our 23.38% level, which we drew there. And it's actually currently resting around the 50% retrace level. So again, if it falls much further below that 61%, we might see a complete reversal. But at the moment, you'll notice the CCI is in that moving average range, giving us a neutral signal on the hourly as well. So again, don't go long or short until you see the daily break above or below that moving average range, to then go long or short on the hourly if you're trading the hourly. So similar story on the NASDAQ on the monthly. First of all, on a trends, we've got new highs there on the price. But you'll notice we've got a bearish divergence on the CCI, lower highs versus higher highs, and I've drawn a target area there on the monthly. On the weekly, we had a couple of areas here that you can see there, that CCI still dropping versus higher highs on the price. I haven't drawn a target range because that's still rising. You can see there if I realign that trend line, higher highs on the price, lower highs on the CCI, so that's still a bearish divergence. And on the daily, I've drawn a Fibonacci here to show you where that would retrace to, and it's not far from that. It's actually resting on that minor support at 23.20 after hitting that resistance at 21.235, and it's now looks like it's going to probably at least touch, if not penetrate, this 23.38% Fibonacci retracement on the daily. And if we go to the intraday charts, again, As soon as that breaks below that moving average range on the daily, we take short trades on the hourly. So again, the hourly is still in that moving average range as well, so avoid going long or short. So as soon as that breaks below that, it looks like it may do it on the opening of the week. Wait for this CCI to break below that moving average range on the hourly as well if you're trading the intraday. You can interchange the 1 hour with the 2 hour, 4 hour, whatever other intraday chart you may be looking at. But going back here as well, we did have this bearish divergence versus higher highs in the price. It broke down well below its 23.38 minimum target. And in this case, it's broken below the 61%, which is a critical area. So it may bounce from here, or it may actually fall through. So just wait for the CCI to confirm that as well with the price. So similar story for the German DAX. On the monthly, we're making new highs, but notice we've got a bearish, a long-term, very long-term, going back to the start of 2015. If you're following that over the years, you can see that it's still dropping off. Hasn't made new highs yet. That CCI is still below that peak there versus higher highs in the price. So this may fall off sometime in the near future, possibly in the coming months, possibly. On the weekly, shorter term, we do have this bearish divergence, and I've drawn some targets here in that short-term range. The CCI is broken below the moving average range, giving us a bearish signal. So we may see further drops on the price as well. And on the daily as well, if I zoom in on this one, I've drawn a double top there on the CCI versus higher highs on the price, dropped, hit our target. And this one looks like it's penetrated, if I draw a Fibonacci on that, between that range. Remember, we take it back to the previous Fibonacci or to significant low before that divergence started. And this one's bouncing in around the 50% level as well on the daily. But notice on the CCI, the CCI has dropped off and below the moving average, giving us a bearish signal. So avoid going long at this point. On the intraday charts, again, taking short trades only. Wait for the CCI to drop below, and it looks like it's currently in this consolidation range for the last few hours. And this is on the hourly. We did have that was a double top on the CCI versus higher highs on the price, and it fell off quite strongly, well beyond 100% level. And at the moment, we don't have that low is lower than that low, so it's in line with the CCI, so it's not a divergence. But at the moment, the CCI on the 1 hour is above its moving average, so avoid going long until we see this break above the moving average of the CCI on the daily as well. So Japanese Nikkei is showing a bit of a different pattern. On the CCI, it's broken below the moving averages, giving us a bearish signal. There's no divergence on the CCI on the price chart. The price is moving in line with the CCI. So higher highs on both the price and the CCI, so no divergence there. On the weekly, however, if I zoom out here, we can see there longer term we did have a bearish divergence versus the price. Dropped, hit our minimum 23.38% target range, and it bounced out of that. But at the moment, the weekly is also giving us a bearish signal on the CCI, so avoid going long until we see it break. It's a very narrow moving average range, but again, wait for it to break above that moving average range to go long if you're trading the Nikkei. And on the daily as well, it's in this consolidation range between this support resistance of 37.265 and 40.280, and looks like it's currently approaching that support, that minor supporter again, with the CCI dropping below its moving average range. So bearish at the moment on the daily. Going to the intraday chart, this is the 1 hour compared to the daily, so taking short trades only. You would have been wise to go short there when a CCI and the price fell below their respective moving averages. Now I prefer to take a close a position when the CCI touches the moving average, so you would have closed that out on that little candle there and re-enter it on that candle there going short again. The CCI gives you an early warning or early exit compared to the price chart. Sometimes the price can accelerate quite quickly and you lose some profits, whereas the CCI gives you early exits, and you would have closed it out again at that on that second last candle on that hourly as well if you're trading this on the hourly. So this is Tesla. I'm including Tesla as a share price in this review as well as a case study, but on the monthly, notice it's broken quite strongly above its moving average of the CCI and also the price. So potentially it's making a bit of a recovery. On the weekly, likewise bullish movement on the weekly CCI and price. Now we did have a bearish divergence back here. This fell back and well below the 61%, and it's been hovering around that, around the 50% level for some time now. And on the daily, zoom out on this one, you can see there it's hit this key resistance up here at 361.80. So just be careful about going long. You'll notice the CCI is broken into that moving average range, so it's neutral. I'd like to see it break above, a fresh break above that moving average to go long again, but especially if it breaks above this resistance, then probably a bit more confidence in going long. At the moment, be careful, it may pull back, and I've drawn a Fibonacci, that was a short-term Fibonacci there, divergence, bearish divergence versus high highs in the price. Hit that range and it bounced out of that. Currently there's no divergence on the daily to speak of. If we go to the intraday, again, avoid going long or short until we see this daily confirm. But at the moment, the hourly is showing no divergence. You can see there it's pulling back, giving us a bearish signal at the moment. Now, I don't normally trade on the hourly on the shares. I do trade on the daily, but I'd still look at the hourly charts for any signals. So you can see here, for example, we had a bullish divergence versus lower lows on the price, and it bounced quite strongly, and you would have gone long on that bullish candle, and you would have closed it out right near the top there when that CCI broke into that moving average range. And again, you would have gone long on that little break above, and you possibly could have closed it out. It's a bit hard to read that one on that one. Yeah, you probably would have either held it. That's why I prefer to keep buy stocks that pay at least a small dividend, so you can get some level of return if you're holding this longer term. But again, you would have paid off had you gone long on that candle there, held it, and it's spiked up from there, and you would have closed it out when it broke at that point there. Probably re-enter another level there, held it, and closed it again when it hit that candle there. Enter it again, and in this case, you would have probably break even or a small loss depending on your stop loss strategy near the top there, and avoid going long any time from there on. So again, wait for this to break above the daily CCI if you're trading on the hourly. Otherwise, if you're trading on the daily, wait for it to break above, but take note of any divergence on the 1 hour time frame. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.